What's up, everyone? Excited to give this video today about Carvana, which is printing an extremely bullish pattern right now. This pattern is called a cup and handle, and it it really just occurred to me that this pattern is being printed in this stock. So I've been covering this stock over the past couple weeks. I called it out as a buy at $6. I called it out as a buy at $20, and we're seeing this upside, kind of top out at resistance at about, $57, which is where shares had topped out in August of last year. So we see August of last year topping out at 57, topping out at this level once again. First off, this is not financial advice, so please do your own research in D&D. But with that being said, so I'm going to give a share price prediction for the stock based on this formation here. So this is a cup and handle formation. We can see the cup, we can see the handle. Basically, this is a bullish, chart pattern. And what we typically look for when we're looking at a cup and handle is we look to see that the stock has formed a top where it had topped out in the past. So we're looking for the stock to come up to test a prior high, and that selling pressure typically ensues off of that prior high, which is what we got here. The interesting part here is we also aren't another rule for a cup and handle is that this handle, if you will, this kind of downside we see after that rejection of resistance, it can never fall past 50% of this move. So it can never be below halfway or like halfway down this cup. So the handle is meeting that criteria. We haven't fallen halfway below the cup. And the third thing that we look for is a decline in volume as we see a rejection of this resistance level and we see this handle start to form. We look to see a decline in volume, as this kind of moves forward and this handle continues to form. So we can see here that we've seen declining volumes as shares have fallen over the past couple of days, over the past 2 days really. So this really meets all the criteria to be a cup and handle. People may think, oh well, how is it a cup and handle when it's been almost a year since this handle has started to form? Well, cup and handles can actually form for over 56 weeks. So we're kind of right at that threshold for this cup and handle to be valid and to be signaling a buy for shares. So honestly, kind of shocked I didn't see this before, but this is all very clear. And the question is, where could shares move from here? Well, if we're able to break out of this handle and break above resistance at $57, well, I think we likely continue higher. And how much higher? Well, the breakout point, the price target is usually based on the cup's depth. So the price target for any cup and handle pattern is simply the depth of the cup, from the breakout point. So if I go to the breakout point of this handle, well, that's a $50 move to about $106. So, kind of insane to be, showing this price target, but it does make sense when you take a look at the pattern. This is typically how it plays out, right? We get this cup depth move on the breakout. So, I know this kind of seems crazy to call 100% gain in a stock, but we've seen Carvana do some crazy things over the past couple months, right? So it doesn't seem super shocking that we would see a continuation of this move higher. It's my personal opinion that if we get a breakout, and that's a big if, so this is just lines on a chart right now, but if this cup and handle pattern is confirmed and we get a breakout, well, that's when I think it will be very, very likely that we see a move higher to about $100 over the coming weeks for the stock. And this price target actually coincides with a resistance level at about $100. And this is where we hit in March of 2022. We use this level as support, and past support becomes new resistance. So once we come up to this level, I expect this $100 level to act as resistance. So obviously, I know this is a crazy prediction. Like I said, I'm not on the hook for this until we break out. All right, then you can blame me. Then you can curse me out. But wait at least till we break out before you start cursing my name here. So yeah, that is my observation on the chart right now. I know it's pretty crazy. It's pretty far out there, but no one's talking about this right now, and that shows you that this isn't really widely known in the market right now. Um, and then, what I also do love to see is this pattern is all happening as we see very bullish momentum for shares. So we have the stock trading over all daily moving averages, and we had the 50-day moving average cross over the 200-day moving average back on June 22nd, which for those that don't know is called a golden cross and implies bullish momentum. So when you add it all up, you got the bullish momentum. You have, this great bullish pattern being printed for the stock, and you also are seeing the stock fall from overbought RSI levels. So now that the stock isn't overbought according to RSI, well, RSI shouldn't act as a headwind for shares anymore, or not anymore, but at least for the foreseeable future. So you kind of add all that up, and you can really take away that the stock is in a massively bullish spot technically, and in my humble opinion, we likely will continue to move higher over the coming weeks. And I do think if this pattern plays out, we could see a massive move higher. And when we take a look at where we are seasonality wise, so this screen shows me which month the stock typically does well in, which month the stock typically does poorly in. And we can see in July is the best month on record for this stock. And then August is the third best month on record for the stock. So in August, shares typically jump 41%. So we have this seasonality trend kind of lining up with the technical setup. So just another reason why I think shares could likely move higher. But I'll put the pom poms down for Carvana right now, and I'll talk about why shares have dropped over the past couple of trading days. And a big part of that is obviously that resistance level that I covered here at about $57. But another part of that is we saw a couple of downgrades. So Piper Sandler downgraded Carvana to neutral from overweight on a valuation call following the recent share price rally and debt restructuring development. The firm believes that chasing the stock higher would necessitate an upward revision to Carvana's long-term used vehicle market share expectations, which it does not believe recent results are sustainable. So they're basically, writing off the recent bullish earnings. So they don't think that will last. And then I'll read a note from their analyst Alexander Potter. He said, "We upgraded Carvana last September on the basis the company was trading at a significant discount to intrinsic value due to bankruptcy risk. When we thought that was unlikely that the company would go bankrupt. Now that the bankruptcy scare has abated and the stock has risen to $47, we believe Carvana is approaching a fair valuation." So it's not really a call that the stock is going to fall off a cliff or the stock's going to zero. It's just a call that shares are at their fair value. And then Carvana also lost some steam last week when S&P Global Ratings lowered its credit rating on Carvana to CC from triple C. So that was after the company entered into a debt restructuring agreement for up to $4.3 billion worth of senior notes. The rating agency said it views the proposed transaction as distressed and said it would be tantamount to default if completed because lenders will receive less than originally promised. The negative outlook reflects S&P's expectation that it will lower the issuer's credit rating to D default level upon completion of this proposed exchange. Shortly after the proposed restructuring, S&P said it would raise the ratings to a level that reflects ongoing risk of a convertible default or future distressed restructurings. So the proposed transaction is expected to somewhat extend Carvana's maturities and offer significant cash interest cost savings due to the PIK option. However, the principal amount of the new securities offered is less than the original par amount. The new maturities extend beyond original dates, and the timing of the payments will be slower than the PIK feature. In addition, debt holders are essentially being primed by the senior position of the new notes. In our view, Carvana is pursuing this transaction because its capital structure is unsustainable, quite frankly, which I've covered on this channel, and the company has limited options to reduce its debt burden and improve its cash flow organically. So obviously it's not a good sign to see a debt downgrade. That's obviously pretty bad for shares. And then we saw another downgrade as well from RBC Capital Markets. So RBC Capital Markets downgraded the stock. The used car seller reported better than expected Q2 results, as we know. And then the company said, sticking to fundamentals, we move to underperform. So it's just a call on fundamentals. And then it says, we believe long-term margin improvements are now likely well overappreciated and faster, a faster return to growth is likely necessary to cover debt costs and significant dilution and expanding debt load post restructuring are likely coming. So I would agree with some of the points there, that like some of these bear notes, some of these downgrade notes definitely make some good points that the company's in a unsustainable spot when you look at the balance sheet. I would agree with that. I've definitely talked about the balance sheet at length on this channel. But let me just take a look here, and RBC raised estimates and its price target from 30 to 230 from 9 on better than near term performance and lowered liquidity risk, but the firm expects the stock and more measured fundamentals to converge over the coming weeks to months here. So obviously they are somewhat bearish on the stock, but with that being said, let's take a look at the balance sheet here, right? So basically both of those two bearish notes were talking about the balance sheet and the fact that the company, I shouldn't say the fact, the perception that the company won't be able to fund its future operations based on its kind of treacherous balance sheet position here. So let's take a look at what that actually looks like, right? So when we take a look at the balance sheet, we can see that the company has $876 million in cash, and they have $8.4 billion in debt. So they have $7.5 billion in debt. They have $7.5 billion more debt than cash. This tells you that the company is in an unsustainable position, unfortunately. I don't get any satisfaction by telling you that. It's just the matter of the fact. So unfortunately, given the company isn't, net operating cash flow positive, they're burning money, right? Every quarter, they're losing money from their cash from operations, right? So they're losing money every quarter, and they have a significant amount of debt relative to their cash. That's just an unsustainable position when you look at the balance sheet. So it's definitely something to be looking at and to be aware of when you're investing in this stock. Just know that the balance sheet is somewhat suspect. But with that being said, I really do love this technical setup. I think this cup and handle pattern plays out over the coming weeks. Obviously, don't quote me until we see a breakout. But once we see that breakout, I do think we see a larger move to about $100 over the coming weeks. So, crazy pattern here. I'm glad I at least caught it today. So if you enjoyed the video, please leave a like and subscribe to the channel. With that being said, I hope you have a good one, and I wish you the best of luck trading. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck, everyone. Happy trading, happy investing.